afternoon. This is Oliver Sloup, Blue Line Futures, coming to you with another episode of the 2-Minute Drill, where I've got 2 minutes to share my thoughts on a couple different markets that caught my eye in today's trade. Now, before we get into the charts and the technicals, do want to encourage you, if you do not follow us or subscribe to our YouTube channel, head over to youtube.com, type in Blue Line Futures, hit that subscribe button. Me and my partners put out a lot of daily content, and we'll also be on the Pro Farmer Crop Tour here coming up in a couple weeks as well. So we'll put out a lot of videos with our findings as we head across the Midwest there. So without further ado, I guess we can go ahead and get that shot clock started. Now, the first chart we got pulled up here. If you can't read it, you probably could have guessed it just by looking at it. We've got November soybeans pulled up here, and it has been under extensive pressure really since the start of the month. But we were able to find some significant support at 1282, which represents a 50% retracement, or basically the middle of the range from those May lows to the July highs. I also want to point out that this was the breakout point from this June 30th acreage report. So that was a huge level between 1280 and 1290. The fact that we were able to defend that is a silver lining for the bull camp. And we're able to get back out above 13 bucks, which is awesome too. But the bulls still have their work cut out for them. The 200-day moving average is going to be a big hurdle. That's been a really sticky point for the market over the last month. In fact, coming into today's trade, the market had traded on the 200-day moving average for 10 out of 23 trading sessions. So nearly half of the trading sessions over the last month have been spent on the 200-day moving average at some point, which may not sound that impressive, but considering we're in a $1.50 range for that same time period, I would say that the algos are certainly keeping a close eye on that, and you probably should as well. A couple different catalysts that could potentially make or break the chart setup here. Well, weather, obviously, and that's kind of why we sold off to begin with. If weather turns hot and dry, potentially that sparks some buying momentum here into the middle of August and through the rest of August. We've got demand. That's going to be a big one going forward. We've seen a couple strings of flash sales here recently, another one this morning. And then Friday's USDA report, where the yield is expected to drop 0.7 bushels per acre. Those are big things to keep a close eye on going forward that'll probably influence the technical landscape going forward. So again, I like the fact that the bulls were able to defend support, but they've got their work cut out for them, and they're going to need some help on the fundamental landscape to get a breakout above the 200-day moving average. So that's what we're looking at. That should be right at 2 minutes on the dot. If you want more information on how we're playing this into the USDA report, not just on soybeans, but corn, wheat, anything else out there, feel free to give us a shout. Before we, I guess, move on and in this thing, I do have the live cattle seasonal pulled up here. I do want to do something on this week. The fundamentals are still very strong for the live cattle market, but seasonally, this is a weak time. So if you've got to put a floor in the market, it's maybe a decent opportunity to look at doing that. And again, if you've got questions on that, feel free to give us a shout. Again, remember, futures trading and options involves substantial risk of loss and is not suitable for all investors. Thanks a lot.